Now we come to the second part of the cash flow from investing activities. Now, we start when it comes to cash flows from investing activities. Actually, it is much more simpler than operating activities. Why? We are basically talking about only investing in two types of assets: investing in operating assets and investing in non operating assets. What are operating assets? Operating assets are basically those assets which are related to your business. Like what? Like property, like plant, equipment, whatever you require, the assets you require to produce your revenues. It can be sale, it can be service, it can be revenue from services, or it can be revenue from sale of goods. So, when we are talking about cash flow from investing, we are just looking at the capex, that is capital expenditure which you have made during the year. So, if you have made capital expenditure, what will happen? Your cash flow will reduce. Why? Because you are putting money for purchase of, let's say, additional machinery or setting up a new factory. So that capex will reduce the cash flow. Let's assume that you have old machinery and you are selling that machinery. What will happen? You will receive money from selling of those machinery or disinvestment of your capital expenditure. So disinvestment of assets basically means selling of your old assets. So that results in increase in cash flow. And this is basically an organic way of growing your business. What is the inorganic way? When one company takes away another company, right? Like Disney took over so many companies. So that thing will result in what? That will result in cash outflow, provided you have paid cash for purchasing that company. Sometimes the companies issue their own stock to purchase the other company's stock. In that case, that figure will not come here. However, if you have paid cash to purchase the stock of the other company, like Elon Musk is paying Twitter to basically purchase their shares, then this will result in acquisitions. So this is how we say the cash flow from investing in operating assets. Now, what are cash flow from investing in non-operating assets? So Apple, let's say, has $100 billion of cash in its balance sheet. What will it do with cash? Ray Dalio keep on saying cash is trash. So Amazon definitely will invest in some kind of funds. It can be mutual funds, it can be US government treasuries, it can be Vanguard, index funds, whatever. But they will not let that money stay idle. They will put it in some kind of investments so they can get some kind of return back from them. So the Apple will be investing their excess cash in financial assets or non-operating assets. So when Apple invests that amount in financial assets, what will it result? The cash will go out of the company and you will get on balance sheet the financial assets. And when you are selling those financial assets back in the market, then what will happen? Cash will come back into your company. That is, cash flow from investing will increase and those assets will disappear from your balance sheet. So this is how you make cash flow from investing activities. So considering our previous examples, let's see cash flow from investing activities of Google Alphabet. We can see here that in 2021, the cash flow from investing activities of Google, it has basically made a capital expenditure of purchase of property and equipment of $24 billion. What is this? This is investment in operating assets. They have purchased machinery, equipment. This has resulted in decrease in cash flow. Accordingly, they have purchased marketable securities. This is basically financial securities which they have purchased from the market. That is $135 billion. Like I said, Apple had huge amount of cash in its balance sheet and it will not let it stay idle. So where is that cash being put in? It is put in marketable securities. So it has purchased $135 billion of marketable securities and it has sold $128 billion of marketable securities. That means a net cash outflow of $7 billion of marketable securities have been purchased by Apple during the year. Non-marketable securities basically mean investments of small amounts in other companies. So non-marketable securities have been purchased of $2.8 billion. They have sold from those non-marketable again. Some of them have been purchased, some have been sold. And these come out to be acquisitions. Like I said, and purchase of intangible assets. That amounts to about $2.6 billion. Like I said, Apple can either grow organically, which they have done by investing in capex of $24 billion and they have made acquisitions during the year of $2.6 billion. So this investing activities basically shows where you are putting this operating activities cash flow. So now it is important to see both of these statements hand in hand. This was cash flow from operating activities. Google had $91 billion of cash flow from operating activities, and out of those $91 billion, $35 billion have been put up in investing activities. In what sense? Well, the majority of it is in purchase of plant, property and equipments. $7 billion have been put in marketable securities just for investing, and $2 billion, around $2.6 billion have been used for acquisitions. You see how it changes the entire perspective of your business. When you are looking at balance sheet, you are just looking at assets and liabilities. When you're looking at income statement, you are just looking at how much company is made. But when you're looking at cash flows, and when you are looking at cash flows from different perspectives, like cash flow from operating, cash flow from investing, you understand where your whole money is actually being routed. You understand in Google, $91 billion of cash inflows has been earned, out of which $35 billion have been used during the year. So this is an extremely important information for you to understand what is actually happening in your business. Let's take another example. Let's take the example of Amazon. So the cash flow from investing activities in Amazon. Now we remember that cash flow from operating activities was $66 billion. What had Amazon did with this $66 billion? It invested $40 billion, that is capital expenditure, in purchase of property and equipment. Right? It had sold some old property and equipment of $5 billion. So that means around $35 billion have been purchased in new property and equipment, that is organic growth. They have made acquisitions, that is inorganic growth. They have made acquisitions of around $2 billion to purchase other companies' securities. They have sold again marketable securities, and they have purchased marketable securities of around $22 billion. So that means of $66 billion, around, I would say, $37 billion have been invested in growing the company, and around $22 billion, that $22 billion cash has been used and parked up for marketable securities for investment purposes. So this is how you see cash flow from investing activities.